Welcome to BigONE Weekly News Update. I'm Mia. Crypto markets remained range-bound last week as investors shifted their focus from price action toward regulation, monetary policy, and institutional adoption. While major assets lacked a clear breakout, the industry entered a critical phase where upcoming legislation could determine the next stage of market development. Crypto consolidates after a recent rebound. Bitcoin traded mainly between $61,000 and $64,500, ending the week slightly higher, but still below $64,000. Ethereum gained around 1% to approximately $1,800, while Solana declined about 6% to $76. Hype remained relatively stable near $67. The broader market showed mixed signals. Technology stocks continued supporting U.S. equities, with the Nasdaq and S&P 500 both recording their second consecutive weekly gains. However, renewed U.S.-Iran tensions pushed oil prices higher, with Brent crude rising more than 4% and ending a 4-week decline. Strategy makes first major Bitcoin sale. One of the biggest developments came from Strategy, which disclosed its first significant Bitcoin reduction. The company sold approximately $216 million worth of BTC through 2 transactions, far exceeding its previous small disposal of 32 BTC in May. The sale did not appear to be part of its previously announced Bitcoin monetization program, leaving the company with additional flexibility to raise up to $1.25 billion through future BTC sales. The move raised questions about whether corporate Bitcoin treasury strategies are entering a more mature phase, where accumulation may be balanced with capital management needs. Crypto regulation reaches a critical turning point. The biggest long-term catalyst remains regulatory clarity. The U.S. Clarity Act has entered a crucial window, with lawmakers facing pressure to advance the bill before the August 7th recess. Without progress before the deadline, the likelihood of passage during the current congressional session could fall significantly. The legislation faces several unresolved disputes, including ethics restrictions for government officials involved with crypto, protections for software developers, and whether exchanges should be allowed to offer yield on stablecoin balances. If passed, the bill would establish clearer oversight of major digital assets, such as Bitcoin and Ethereum, under the CFTC framework, potentially removing a major barrier preventing institutions from committing larger amounts of capital. SEC moves toward a new crypto framework. Regulatory momentum is also building at the SEC. The agency may introduce Regulation Crypto as early as July, creating temporary registration relief for developers launching crypto investment contracts, allowing limited fundraising, and providing a safe harbor for certain issuers exiting securities-related activities. If adopted, the framework would represent one of the first major crypto-specific regulatory initiatives under SEC Chair Paul Atkins, potentially improving certainty around crypto innovation, financing, and tokenized securities. Robinhood Chain shows real demand can differ from design. The launch of Robinhood Chain highlights another important market trend. User behavior often diverges from infrastructure creators' original plans. Although the chain was designed around tokenized equities, real-world assets, and regulated financial products, meme coins quickly became its most active use case. The development reinforces a recurring lesson in crypto. Short-term adoption often follows speculation and social momentum before longer-term utility emerges. Markets await inflation data and earnings signals. Investors now turn toward a key macro week, with US CPI data and earnings season taking center stage. Core CPI is expected to rise 2.9% year-over-year. A stronger-than-expected reading could revive expectations of tighter Fed policy or delayed rate cuts, increasing volatility across risk assets, including crypto. Conclusion: crypto markets are currently in a holding pattern, but the next major move may be determined less by price action and more by policy decisions. Regulatory clarity, institutional participation, and macro conditions are converging at a critical moment. If clearer rules emerge, crypto could enter a new phase of institutional expansion. If progress stalls, uncertainty may continue to limit broader adoption. For now, the market is waiting, not for a new narrative, but for the regulatory framework that could define the next cycle. Join BigONE today and take advantage of the growing cryptocurrency market.